Welcome to episode number 1 of Symbotic Weekly. I have been covering this company for over a year. I've got the most extensive content library on YouTube covering Symbotic, SYM. I figured it was time to just start a weekly show. So let's get right into it here. So if you guys don't know already, Symbotic is an AI-powered warehouse automation play. It hits all the trending buzzwords that make notoriety seem inevitable here. And, it's a great company that I really like long-term that also seems like it has the potential to maybe generate some meme stock potential in the short term here. If we were to get into a frothy enough market, which lately, it seems like we're heading in that direction. So if we just take a look at the current analyst forecast here, you can currently see there's an average price target of $53.44, the highest being $62 and the lowest being $44. Symbotic has a lot going for it, and I really like this company long term. There's many headwinds facing companies today, especially in retail, and a lot of these headwinds end up being tailwinds for Symbotic because some of the benefits of the Symbotic system are that they alleviate labor shortage issues. They're helping companies adjust their strategies to meet the changing demands and trends that come with e-commerce. And as you can see here on their investor presentation, the customer pays $50 million for the system, okay? And it saves $10 million annually or $250 million over the system's lifetime, 25-year useful life. Now, they continue to add big name clients to their customer base, including companies like Walmart, Target, Albertsons, demonstrating the usefulness of the system and the demand for it. They've got this Greenbox joint venture with SoftBank, which that's poised to start bringing in revenue by the end of 2024. I think that's going to open up a huge new addressable market as the Symbotic system has historically only been fit for these large companies. Greenbox will open it up to smaller companies that may not be able to afford a full traditional system or have small enough inventory needs that they can share a warehouse with other companies. And that's something that other systems on the market are not capable of catering to. So this is a company I think is deserving of a small position. Just tuck away, set and forget it, see where it goes. The way I look at it is if you were to put 1% of your portfolio into it and it doesn't work out, okay, you lost 1%. If it does work out, you're going to do quite well. And if we just take a look at the Google Trends here, they seem to give us good indicators on when is a good time to buy. So I would either start a position if I didn't have one or add to my current position when these trends are low, as it seems to correlate with the lowest stock prices. So if we just take a look here, you can see that here's the Google Trends for the search term Symbotic stock over the last year. You see these peaks and valleys? Let's take a look at the stock price. Basically, to a T, the peaks in the stock price and the lows have matched perfectly to the Google Trends here. So if I just pull them, both up over each other, here's the Google Trends and there's the stock price. You could kind of compare. Look at the peak back in the summer, basically nailed it. And then we had the low in between there, and then another peak towards November, December timeframe, and now the stock is currently sitting somewhere in the middle. So if I were to judge it today by this metric, I think it's a decent buy right now, but it becomes an excellent buy if it continued to go down to the $40 and below area. We'll take a look at the technicals in a minute here. So you can either wait or sell puts, taking advantage of the high premiums that you're getting from the volatility right now, and you get paid to wait for a better entry. That's a strategy I've been utilizing along with selling covered calls. I'm essentially turning this into a free position. So here are all the trades you can see that I've made on Symbotic, which earned me $4,845.56. That's while I've owned shares in the company this whole time. And quick plug, I share all these trades in real time with community members. If you're interested, check out the link to my Substack in the description below. So yeah, literally selling covered calls on my positions. I've got 200 shares here. You can see most recently, I had to roll it up and out this week to 46. It's funny, the 45 call last week would have actually worked out, but I was on vacation, so I just wanted to play it safe, but it ended up closing just below $45 on Friday, but it still worked out. I was able to close that out for $100 and roll it to two new contracts, 150 each or 300 total. So let's take a look at the recent news here. We'll start with the bad. The company recently issued 10 million new shares, diluting shareholders. This was a fear I had outlined in previous posts on Symbotic and predicted it would continue. The company has been steadily increasing the share count by quite a lot. As you can see here in my chart I've been tracking here, in Q1 of 2023, if we go back a year, they had 58 million shares outstanding. And that number was up to 83 million in the most recent quarter, a year later, Q1 2024. And it's since added 10 million more shares. So now they're up to 93 million shares outstanding, nearly a double year over year. And I predict this dilution is going to continue, and you're also going to see the growth rate continue to trend down. You can kind of see it's already happening. Last year we were growing insane, 177%. Most recent quarter was only 80%, and their Q2 projection was around greater than 50%. But this is healthy. You obviously cannot grow at these massive growth rates forever. It's still a amazing growth rate if they can pull that off, but I do think you're going to see the growth rate continue to come down. So when you accompany those two things, the growth may be slowing down, the dilution going up, it could present some problems for the stock in the short term. Or if you believe in the company long term, an opportunity. So definitely something to keep an eye on. 93 million shares outstanding, nearly a double year over year. So I do predict this is going to continue. You're going to see the growth rate trend down, which may cause some damage to the stock price short term. But if we were to have a decent pullback, I would add to my position, as I do believe in this company long term. Now, on to the good news here. We just had this company, LPL Financial, increase their position by 578% during Q3. So they now own over 102,000 shares worth $3.4 million. And we've got other notable names that have increased their stakes significantly as well recently. I'll go through some of them on the list here. JP Morgan and Chase, they bought a new stake in Symbotic in Q2 worth about $534,000. BlackRock increased their position by 325% during Q3. They own 170,000 shares worth just under $2 million after acquiring an additional 130,000 in the last quarter. We've also got Bank of New York Mellon and Vanguard purchased a new position in the third quarter, valued at approximately $1.5 million. So institutions do continue to buy shares, which that's always a good sign. Now let's go on to the technicals here to wrap it up. All right, so as you can see here on this chart of Symbotic, if we just go back, to the 6-month chart here, Symbotic does seem to be in an overall downtrend. As you can see, since December here, where it kind of hit its peak, it has had a series of lower highs. And then in the last week, it has been going up. If we look shorter term, just the last 7 days or so, it's been going up, though it's being met with a lot of selling pressure. If we zoom in, you can see the candles here, a lot of selling. It tried to break out higher, and we're getting a lot of selling pressure. So it's currently above all its moving averages. I think when it crosses this 200-day moving average, the black line here, that is a good place to buy more. That currently sits around $42. And if we just zoom out, you could see whenever it's crossed that black line, the 200-day, if we just go 6 months here, the stock price has quickly snapped back and gone, very high. Like back in November, $32 was the 200-day. It barely stayed below that, and before you knew it, it went from $32 to $57. And then again, more recently, that does seem to be a good buying point. So if you guys enjoyed this video, don't forget to like and subscribe. Leave me a comment below on Symbotic. And if you'd like access to our community, we do a private weekly Zoom call. That'll be tomorrow. You can subscribe below to my Substack to get access. You also get access to all my stock and option trades. And a community that is home to several 7-figure stock and real estate investors. We're constantly discussing stocks and real estate there. So if you're interested, don't forget to check that out in the description below. This is Vinny from the Investment Club. I'll see you guys next time.